Assalamu alaikum. Welcome, dear student, to commercial subject group. Our subject accounting 212, accounting 804. Our lesson today, chapter 9, accrued expense and accrued revenue. This chapter will cover two objectives. The first objective, accrued expense for the adjusting entries. The second objective, accrued revenue for the adjusting entries. Type of adjusting, there is two parts. First part, prepared expense and unearned revenue and the supplies. This part we already taken in the previous lesson. This is the first part. Now in this one today we talk about the second part. There is two type of adjusting entries. One of them, the first of them, accrued expense, and there is accrued revenue. Let's start for the first of them. Number one, first of all, accrued expense. What do you mean by accrued expense? It is an expense of incurred but not paid. Not paid or recorded at the statement dates. Let's see the first example. Example 1. On January 1, see the first for the date. ABC Advertising Agency signed a note payable. There is a note payable for 19,000 PD by simple interest. This is we mentioned in subject finance 111. This is the principal by simple interest rate 6%. This is the I. Annually, the adjusting entries, you want the adjusting entries for December 31, 2019. As you see here, from 1 January until December 31, you mean 1 year. This is the T, you mean the time. So, how to calculate the interest expense? I take the 9,000, this is the principal, this is the B. 6%, it is the I. 1 year, it is the T, because from 1 January until December 31, you get 140. So now, how to put it or prepare the general journal? I will put the date, December 31, 2019. I put the interest expense and interest payable, and 541 in the side in the debit side and the second in the credits side. Let's see the example 2. Let's see the example 2. There is another type of wages expense of BD 2,600 have been incurred but not paid on December 31, 2015. How to prepare the adjusting entries? It is directly, no have chance to make any calculation. I put December day 31, 2015, wages expense and wages payable. I put it in the debit side 2,600 and 2,006 in credit size. It is directly. Now we talk about the second type of accrued revenue. What do you mean by accrued revenue? If an item of revenue is accrued, it is mean that customer got a benefit or service provided by the business but not been mentioned for the not paid during in the end of business financial period. Let's see the example 3. On December 1, 2018, Better Cleaning Establishment earned 700 for cleaning service that were not billed. You mean not billed, it is mean two words, on credit or on account. To client on December 31, 2018. So, the adjusting entries, how to put the adjusting entries in the general journal? I put the date, December 31, 2018. I put it the account receivable and service revenue directly with the amount one side in the debit side and the second for the credit side. Now, see in the summary, you have one type of expense, one for expense and the second for the revenue. The expense, you have two types, one of period and the second for the accrued. What do you mean by prepare? Prepare, you mean cash before service. Accrued, cash after service. How to put the prepare in the general journal? This is the entry, salaries expense and salaries, prepare salaries. For the accrued, I put in the debit side rent expense and rent payable in the credit side. The second, for the revenue, you have two types of revenue. You have cash before service and you have cash after service. Cash before service, you mean unearned. What you put in the unearned for the entries? You put unearned service revenue in the debit side. In the credit side, you put service revenue. And the cash after service, it is mean accrued. You put in the debit side account receivable and the credit side you put service revenue. Let's see now the example for the both type of the adjusting entries we are taking from previous lesson and lesson today. Hassan started his business on January 1, 2016. The trial balance at January 31, 2016 is shown below. This is the trial balance of Hassan company. So, other data, this is the transaction. There is 6 transactions. See, it is very important to read the require. Prepare the adjusting entries for month, no need for the whole years. For 1 month on January 31, 2016. So, the first transaction, this is supplies on hand. Supplies on hand, we take it before the previous lesson. So, when I put it in the general journal, see the solution in the general journal. The first transaction, here supplies expense, I put it supplies expense and supplies. Here 2,500, I put it from a question, 1,500 from a transaction. Now, I will subtract 2,500 minus 1,500. I will get 1,000 in debit size and credit size 1,000. Let's back to the question or transaction number 2. The insurance policy for the year, she's mentioned here 1 month, only 1 month. Now, the transaction 2, I put insurance expense and prepare insurance. How I get the amount? I will go back to the question to take the amount of prepare insurance. See here, prepare insurance, the amount 4,200. I will over 12. Why over 12? Because 1 year I have 12 months. And they mention in question there is prepare the adjusting entries for month. So divided by 12. We'll get 350 in debit size and credit size 350. Let's go to the third transaction. 500 of unearned service revenue have earned at the end of the month. So transaction 3, I will put unearned service revenue and service revenue and credit size by 500 in debit side and the credit size 500. Let's go in fourth transaction. Accrued salaries, there is accrued salaries mentioned 1,600. So I will go back in fourth transaction. I bought salaries expense and salaries payable 1,600 and debit size and credit size 1,600. Go back to 5 transaction. The equipment has a 5 years life and salvage value is 1,000. So go back to the straight line you have mentioned for the rules. For the equipments, I will take the amount for the equipment. So here mention the accounting, for the equipment 25,000. And salvage value, I will subtract salvage value 1,000 over 5 years. See? Number 5, transaction 5, I will put depreciation expense and equipment depreciation. So 2,500, it is the original cost, and 1,000, it is a salvage value, and 5, it is a useful life. And we have get 4,800. And we have to mention in the question, prepare the adjustment for 1 month. So I will multiply by 4,800 multiply by 1 over 12. 1 it is mean 1 month only, and 12 it is mean the month. Get 400 in debit size and credit size, it is 400. Let's see the last transaction. Perform service 3,500 during the month have been not been recorded. So I will go to prepare the general entries. I put account receivable in debit size and service revenue in credit size 3,500 and debit size and credit size 3,500. This is the trial balance of Umar Advertising Agency, and this is the transaction. Now, you have salary, first transaction, salaries expense, not paid. See, not paid. How to prepare the general entries for the first one for the accrued expense, for the salaries expense. First one, I put the salaries expense in debit size and credit size. I put the salaries payable 800 in debit size and credit size 800. It is directly. No need to have calculation. Now, the second transaction, $750 of supplies have been used. No need to subtract from supplies any question. It is directly used. $750. So I will go to the solution for transaction 2. I put in debit size, supplies expense and supplies. $750 in debit size and credit size $750. Let's go to the third transaction. Expire insurance for the period 400. Transaction 3, I put insurance expense and prepared insurance 400 and debit size and credit size 400. Let's go the fourth transaction. Depreciation to be charged. This is 10% per annual of original cost of equipment. The expected, there is a salvage value of 5,000. Umar Advertising Agency is using straight line. So I will take the original cost. It is not mentioned here in original cost in the question. I will take it in the trial balance. I will go back in the question to take the original cost for the equipment. This mentioned here 20,000. So 20,000 I will subtract it from. See, this is 20,000. it is the cost minus 5,000, it is a salvage value, will get 15,000. As he mentioned here in the question, there is a percentage 20% to 10%. So 15,000 multiplied 10% will get 1,500. So 1,500 in debit size and credit size 1,500. We'll go for the last transaction. 5. The date of note payable October 1, 2017. There is mentioned here 10% of annual interest, but not paid. So 1 October until December, how many months? October, November, December, October, November, December. There is have 3 months. So I will go back to the solution for the last transaction. I put interest expense and interest payable. So 10,000 it is the amount and 10% it is the percentage. 3, as you mentioned here, 3 months from October until December, it is a 3 months. 3 over 12 will get 250 PD. So 250 in debit size and credit size 250. أعزائي الطلبة، شكرا على استماعكم لدرس الادجستنج انتريز. يكون كذي انهينا اللي هو الادجستنج انتريز اللي هو بارت 1 بارت 2 عشان يأهلنا حق هاو تو بريبير اللي هو الورك شيت. لمزيد طبعا عشان تحلون اسئله امتحانات سابقه ممكن نحن نطلع على موقع الوزاره او نحن نحل اسئله امتحانات سابقه. وشكرا لكم على حسن اصغائكم.